What's up, good people? What's good people? Yeah, it's on a Wednesday, another day, another opportunity, and yeah, it's been a good day. It's been an opportunity also that I've got to learn something. Good opportunities to me are always other opportunities for me to learn, because every day, all day, we get to learn one thing or two. So welcome to this video, and remember to like the like button, and please subscribe to the channel so that we may get to get 1% together all day, every day. So without any further ado, let's get cracking and get to see how I did rate price, why I have so many colors on my charts, why some levels were not considered, why did I consider other levels. So let's get cracking. So going to the higher time frames, uh, especially the daily time frame. Excuse me, hopefully my chart is kind of dirty, but hopefully you will see. Let me make it wider so that we may get to see this price action over here. So what did I see? Generally, if you go and refer my video from Sunday, I wanted to see price drive lower to these equal low sell side liquidity and to this monthly fair value gap, but that didn't happen. Why, and why did I change my bias from bearish to bullish? So that this the thing I've been talking about. Never be married to your bias, right? And this was a perfect example. We've seen market from Monday on Tuesday rallying lower, maybe during the manipulation phase, and now this during the expansion phase that occurred today. And why did I change my bias from bearish to bullish? So over here, guys, what we can see, we have these order not order block, yeah, we have an order block above, but the market had reacted off the order block and started retracement lower, and I wanted to see it retrace lower to these lows and maybe to the equal lows I've talking about, which is these equal lows sell side liquidity here. Let me show you. So we have these equal lows that was my draw on liquidity, but that didn't happen. And what I saw is we have a fair value gap here, these candles high and also these candles low. We have a fair value gap inside there that I've labeled the daily inversion fair value gap. As I was doing my analysis today, what I saw is we had on Friday, Monday, Tuesday rally lower, and we can see the wicks rallying lower and did the damage by rallying outside this daily fair value gap to the lower down to the lower time frame. We will see why the market had retraced to these levels, right? But in this price leg, we had everything balanced, and using my premium discount levels from the high of Friday to the low, we can see price had retraced to discount. Remember what I said, we do not buy when we are in premium. We want to get this opportunity when we must retrace down to cheaper prices. That's discount, then we retrace higher. So that's number one thing I'd seen. We retraced to discount, and you can see the reaction of this daily fair value inversion fair value gap. The candles were closing above the consequent encroachment of this daily inversion fair value gap, but the wicks were doing the damage. Wicks fully rebalanced this fair value gap, but we had the bodies closing above the daily the daily inversion fair value gap, because you can see it there. So this was a trigger to me, and so I dropped to the lower time frames and see why did the price retrace lower, and why was I bullish. So basically, you can see this order block here. So we have an order block here that got respected. Also the market rally lower respected this order block by candle not closing below the main threshold of this 4-hour order block, and it tapped it, and we can see how the candles were running higher. And what I saw today is on Wednesday. So on Tuesday we had candle close above this 4-hour inversion fair value gap, right? So to me, this was number one confluence that I am going higher. And you can see below here we have from this line lower, we have everything balanced and price respecting this order block. By this candle rallied lower, tapped into it, then closed bullish. This other candle open, rallied lower, tapped into this down close candle, which is my order block, then rallied higher. As it rallied higher, we had a fair value gap created just above this daily inversion fair value gap, as you can see it there. So price again rallied, and for today I didn't want to see this fair value gap being tapped in. So sorry guys, I'm seeing somebody and I had to she disrupted me, but let's continue. So over here we are seeing this fair value gap, but I didn't want to see it being tapped into. We'll get to see why. And you can see where I did enter my trade. It was inside this daily order block. Let me make it yeah, so that we may keep it in our mind. So what I saw is we have this fair value gap, and I had seen around 1 a.m. so this candle finished at around from 1 2 3 4, at around 5 it closed above this daily order block, right? You can see this candle tapped into it, rally lower. This other candle opened and closed above the main threshold of this order block. But not only did it close above the daily order block, but also it closed above the main threshold of this daily order block. So for me, this was a sign for me to go bullish, right? And since it had closed above the order block and I had seen an immediate rebalance over here, that's where I guess you can see my trade. It was at the main threshold, but I will drop lower, and I will explain why I did enter there. So over here, after I'd seen this candle close above, then I wanted to see this daily order block to act as support of my price, right? To support my price higher. So this was the level that was to prevent price from going deeper into this fair value gap, because this candle had already closed above this daily order block, right? Also above, did it close above this daily? No, it had not closed. So after I'd seen this reaction of this daily order block by a candle closing above, and I dropped lower and confirmed we have some price action inside this order block, which I'll show you, that made me to be assured that this price action was to be bullish. So I wanted to see this daily order block to act as resistance to prevent lower prices into these 4-hour fair value gap. So I dropped to the 3-hour time frame, and what I saw is inside this price leg we had a small imbalance paired with another 3-hour inversion fair value gap. So allow me make my chart more dirtier so that I'm able to explain something over here. So over here, I guess we can see, let me make it this color, yeah, that color. So we have a 3-hour inversion fair value gap over here, which going to the lower time frames, I will explain what I did happen here that also made me not to see price retrace to these levels, right? So I'll explain why we had this price action, and also we can see over here what price was doing. We had a rally higher, and also this candle rallied lower, also a rally higher. Over here we had this candle rally lower and also a rally higher, meaning price action in this area is balanced, right? So price action inside this area is balanced, and so that's what I did read. But let's drop lower to the lower time frames. So remember, I've said I didn't want to see this lower this 4 hour fair value gap being tapped into, and because price had already closed above this daily order block, and we can see over here the up and down movement of price, meaning everything over here is balanced. So this 3 hour inversion fair value gap I was to talk about, you can see it over here how balanced, how it had been already been retapped into. So inside the 2 hour we had this fair value gap over here. From these candles high to these candles low, we have a gap there. Then we have this drop down that balanced this 2 hour inversion fair value gap, rebalance this 2 hour inversion fair value gap, and also we can see how it did react with that 3 hour inversion fair value gap. Then I saw this rally higher. So seeing this price action closing above this 2 hour order block, then to me these are showing me that we are really bullish, and seeing the up and down movement of candles inside here, this showing me that everything around this zone is balanced, and I'm not expecting to see a lower movement of price. So I dropped further into the 1 minute time frame, and what did I see? We saw this down close candle, then we had this large candle, we had no imbalance over here, then the market retraced lower, and as it retraced lower, we had this rally higher, and this was my point of entry. Was it a 30 minutes fair value gap? Then I spotted this 30 minutes fair value gap over here. As you can see, we have from these candles high to these candles low, we have a fair value gap there. So after seeing this price action respecting this level, you can see how this level is being respected. We also had a 1 hour, a 30 minutes fair value gap here. You can see it was tapped into inside these 3 hour inversion fair value gap, and the candles were respecting these inversion fair value gap by the closure above these candles, closure above the 3 hour inversion fair value gap. So this was giving me confirmation or more confluences that the price action over here is really bullish. So then rallied higher, we can see the reaction of the main threshold of that daily order block, rallied lower, tapped into this down close candle, that is the order block. Then we can see this sharp candle that closed not only above the main threshold of this daily order block. Remember, this is the daily order block. Yeah, not only closed above the daily order block, but also outside or outside the daily order block. So then I wasn't watching the market, and then later on, as I was watching, I saw this retracement. Then I caught my sniper entry at around this zone. I did enter my trade inside here. Then you can see the price action. Of course, my 1 to 2 as you can see, I can see my 1 to 2 there. It's a 2.24. Yeah, it's a 1 to 2, so I was targeting my 1 to 2. Then we can see my stop loss, and because everything to me was balanced here, and I'd seen these any imbalance over here, so my stop loss was slightly below this low, and so that maybe the market could have retraced to the consequent encroachment of this week, then rallied higher, but all went into my favor, and you can see this rally of price higher with my 1 to 2, and you can see price really rallied, and this was my draw on liquidity, but we ain't greedy. I take my 1 to 2, and that is it for the day. So yeah, this was my trade, and it took around 1 2 3 around 4 hours to hit TP, and I'm happy. You can see the reaction inside this daily order block, which was clean, and I took this trade and managed to hit my TP. So yeah, that's my trade 1. So I had these equal lows to be considered, but this was before I had noticed this price action. So if market couldn't have played out as it had played over here, then I could have considered my entries below these equal lows. After they could have been taken, maybe watch also this 1 hour fair value gap, then my entry could have been in this area, but we had this opportunity, and we benefited and happy for the day. And trade number one, TP hit, and now let's talk about trade number two. So trade number two was also Swiss franc Japanese yen, and as usual, let's go to the higher time frame, and all the same, because this is the JPY, all the same, price action was the same. So what I saw is, remember my general draw on liquidity, I wanted to see this fair value gap being tapped into, but we are not always married to our buyers, so price action tells us or tells me the story. So what I saw is, I saw this fair value gap that I'm marking here, that is the daily fair value gap from this candle's high, from this candle's high to this candle's low. We have that fair value gap, and I was seeing the candles respecting the mean threshold, the consequent encroachment, or the midpoint of this daily inversion fair value gap, but the wicks did its full rebalance. So this is how yesterday did play out, rallied higher and closed above this daily fair value gap, so which to me was concerning. So moving to the lower time frames, or the daily time frame, we can see how yesterday did play out. Yes, from Monday, Friday, Monday, so we had this consolidation, full rebalance, then we had this retracement higher. So yesterday what happened is, we see these candle close, we see around today at around 5 a.m. this candle closed outside these daily fair value gap. Also over here I had my daily inversion fair value gap, so this was my key level. So after seeing this candle close above this daily 4 hour fair value gap, then the fair value gap below, I didn't want to see it being engaged, right? So what happened is, we see the market continued bullish, right? So this is the price action I caught inside here, and I'll tell you how I did read it and how I did enter. You can see my green and red zone, that's my daily, that's not daily, I'll show you, that is my tool that I usually measure the consequent encroachment of wicks. So at around 5 a.m. this candle had already closed above, so I was trying to look for entries. Down to the 3 hour, what I saw is, you can see the price action, no imbalance along this price leg, everything is balanced. You can see this candle closed above the 4 hour midpoint, and also near the close. Then we saw this next candle create an immediate rebalance, which to me is a confluence of higher prices. You can see it closed above outside this 4 hour inversion fair value gap. Then to me this is a clear opportunity, so I dropped lower, and what I spotted is, we have this reaction, we have a 2 hour fair value gap from this candle low high to this candle low. We have this fair value gap that has already been respected. We have this candle fully engulfed this candle. Then we have these how do you call it, doji, somehow doji, but yeah, the 2 hour, I was seeing the 4 hour being respected, every bullish array being respected inside the 2 hour, giving me confirmations that I'm bullish. I dropped down to the 1 minute, not 1 minute, 1 hour time frame. What I saw, we have a fair value gap inside this 4 hour fair value gap. It had already been rebalanced, everything, and again I saw this order block being respected by bodies closing above it. We had this rally lower with this long wick, came to tap the consequent encroachment of this down close lower wick, this down close candle lower wick, tap the consequent encroachment. Then we can see how it did rally higher. So my tool for measuring the mean threshold is from this long wick, from these candles are open to the low of this wick. I guess you can see it over here, from this zone to the low of this. So this was my consequent encroachment. If market would have rallied lower, I didn't want to see it maybe to the lower than the consequent encroachment, right? So I was watching price, but what I noted is bodies were respecting. Why did I enter this trade? The order block. Yeah, this order block was being respected. You can see the bodies were just closing above the main threshold, so I dropped it lower to the 15 minutes time frame. And what I did see is my entry was based on this fair value gap over here, so I wanted to see market create an immediate rebalance. But what happened, it did rally lower, tapped us in, and then in a little bit drawdown, cleared these liquidities here, never displaced or rallied to the consequent encroachment. Then you can see the rally higher that went and hit my 1 to 2, then my TP hit, then rallied sharply, but that's no big deal. Then we can see now the retracement. So those were my 2 trades, profitable trades, and really happy to be at this level, to that we read whatever the market is showing us, not wanting the market to do what we want, right? So yeah, we get to improve in reading price action. Yeah, so that's how I did read price, and seeing price action inside this level whereby the lows were not taken, higher we have higher lows. Then this to me was another confirmation that for today we are bullish. So something else I want to talk about is going back to my trade, my major trade. The major trade I was looking at today is, sometimes you can see, let's go back to the higher time frames. This was the draw on liquidity, previous week's high / the weekly order block, right? This is the draw on liquidity for me, right? But you can see over here what has happened. The market has not yet tapped into it, but from the 1 hour time frame, what we can see is, we can see these retracements, right? It will tap on, maybe it will tap on later, but see these retracements. Sometimes it may retrace without even taking or tapping into this draw on liquidity, which will be maybe for tomorrow. So that's why sometimes a 1 to 2 is okay, and you are satisfied, and you let everything, if it rallies, well and good, but sometimes it may only take the 1 to 2 and rally lower from, even if you go watch the previous video before this. So yeah, that is it for today. That was the trade for today, and an opportunity to learn that we might have key levels to be watching. You've seen this 4-hour fair value gap I was watching. You can see sometimes price action might not retrace and tap it because of a given array, right? So this is something to keep learning, slow and slow. Also, these equal lows, you can see they are intact for now. Maybe they will referred later on, but we've gotten to learn something today. So before I conclude this video, remember to like and please comment something, and also subscribe to the channel so that we may grow together. So that is it for today. Thank you for being around. Thank you for watching. Until next time, be safe. Bye bye.